This is a trade recap from a pound dollar position we took on the 30th year. So last week we had a pound dollar position, and the thing about this position, which you'll probably notice throughout this video, is why I let it run to such lows on a Friday afternoon. Well, we normally don't take any trades whatsoever, and the reason behind it is it was the last day of the month, and in the previous month, so end of June, we actually got stopped out on the last day of the month because of really strong dollar flow. So really loads of money going into the dollar. And after we got stopped out, it got me thinking why that happened that specific month. So I actually went back and back tested different strategies on the last day of the month, seeing why there's dollar flows on that specific day and such. So that when we are taking the next trade, and if it does facilitate a trade on the last of the month, we're prepared for it. And this is exactly what happened here. I was expecting some dollar strength coming into the last of the month, coming the last of July, coming off all-time highs at 40, I think around 14 out of 18 days for the S&P, were hitting all-time highs. So it's time for some risk off flows on the last day of the month, essentially. So that's why I was able to hold this trade for so long. And Friday afternoon, I think I'll get about 4 o'clock on this trade. So let's actually have a look what was happening. So coming into the 30th, you can see that there's just a lot of buyers making too much money in this market here. There's higher highs being made after higher high and higher lows after higher lows. So there'll have to come a point where these will just get burned. So coming into the day, what I'll do is I'll pause price action to the point where you're able to see what I was seeing when I come in on late. So I come into the office around 6:30. So this is what I saw when I came in on the hourly. So my first thought was, all right, I'm going to be looking for, I'm really keen, as I said, I'm really keen on some dollar strength coming into today. So the first area I highlighted was actually, this high here. If we get price action come in and take this high out, and for market structure break to the downside, I'm very keen on taking shorts to the downside. So this is essentially this is all I highlight in the morning. That was my area of interest coming into the day. Just gone the lower time frames. See exactly what I mean. So this was that's 6:45. So let's play through price action, see exactly what happened. You can see it's a strong run up just before London Open. So at London Open, sorry, at 8 o'clock, it's a strong run into this liquidity pool here. Why is that liquidity pool? It's the previous day's high, and we know these things. If we see a stop run into liquidity pool, and evidence of price exhaustion, which we are seeing here, there's a strong chance we are going to see that market structure break to the downside, and that's exactly what happened. So as price went into here, you can see it's a very, very thin move. The market literally just goes straight up. It doesn't make high after high, and then just kind of come into this level, moves into this level viciously. And what we know is when price moves into this level, into a level viciously with a thin move, it's evidence of price exhaustion. So the next thing we're looking for is for this exhausted move to be filled very quickly, and we want it to be filled want to be filled to the previous structure. And where's the previous structure on this trade? And it's, let me just highlight it, it's just here. So the last swing low essentially on 50, I was trading at 5 minutes, so I'll go down to a 5 minute and see what I mean. So this was the low I was looking for to be taken out. Why was I looking for this to be taken out? Because there will be evidence of the switch in market structure for the market. So that's why we'll be looking for shorts after this, once this low is broken. And so we have the high taken out around 10:30. So if I just continue play price action, and then you see, so from this point onwards, the move into this liquidity was evident, and as quickly as it moved in, it was filled very fast. So as it's filled, this move to the downside actually closed below this low here. That's a confirmation of the price turn. So now I've got confirmation. I'm looking to enter the market, and personally, you can have different entry. Personally, I entered the market on the 1 minute. So where did I enter on the 1 minute? My entry was actually around these lows here. and I'll tell you why in a minute. So this here is a massive liquidity pool on the 1 minute. There's no clear direction where it's going to go, but this is the base of liquidity. So once price pops from this pool here, you can see this is the evidence of a price exhaustion. Comes into this level and then fills it instantly. Comes back, taps this liquidity pool again, and then swings away to break market structure. So that's why I'm looking for price to actually come back in here, because there's a lot of liquidity in that specific area there. So there's going to be buyers supplying buy orders, sellers supplying sell orders. So it's a strong area for me to actually enter the move. And why am I confident entering the move here? Simply because we've now got evidence that the market has turned, so the market will go to the downside, which plays along with my for my bias coming today for the dollar to have strength, and the dollar index was actually indicating some strength at this point. So if I just put my PR now, here, my stop on the high. So with my target, I'll zoom up to high time frame so you can see where I was targeting. So my actual target was, now this will, with the high from the day here. So why was I targeting such low R? Well, such high R, because 6R is very high. I normally target 3 to 4R. First of all, as I said, I believe the low from the day will be taken up very shortly, especially as the market structure has been broken just after the London session. If it was broken coming into the New York session around 1/2, then I'd just be targeting today's low. But because it came in so early, I believe we can actually, when we enter the trade, we can hold it for longer with the dollar flows being so strong. And I was targeting the high from the previous day, so not from the Thursday, but from the Wednesday, which is just down here. It's a very strong level. We had a strong level here in the market as well, which ideally I could have targeted as well, but thought I'll just target this high from the day as price action is likely to go there. So just go back on a 5 minute. So as it broke market structure, kind of swung away, and then you can see eventually it did come in. It's a nice break of market structure. Market comes back into this level again, and I believe it hovered around my stop for a while. See, I was with these trades on enter on the 1 minute. I'm comfortable with price action being in the stop loss, because you normally see it come back and actually generate more orders in the market where it's there. It's waiting for that pop to the downside. I have predetermined areas where I don't want price action to go, price action to close. So any price action above these highs here, then I would have been out of the trade. Luckily for me, that didn't happen, and then I just sat through a period of drawdown. But that's normal for me. I'm used to this. I know my strategy, so I'm comfortable sitting in drawdown when my trade's entered, as long as those predetermined levels get hit. And it kind of hovered, and then it just started moving down very, very nicely. So we have what I'm looking for these trades as price action comes in, swings down, makes a lower high, swings down again, makes a lower high, swings down again, and then I can trail my stop over these lower highs, as I'll never move my stops to break even. I'll just trail them under the highs. Well, if I'm going short, over the highs, and if I'm going long, under the lows. And you can see exactly this is what happened. Price action was just moving nicely, creating those swings in the market. And then you got to the New York Open, and it actually had a big correction. So this was just after the New York Open, so at 1/2, market came in again, but my stop was actually here. So the first, with my stop being here, the first movement I had was here. Once we've broken these lows, then we've broken these lows, and we want to stop there. Then once we've broken these lows, obviously we must stop there. Then we broke these lows, made a new high. But as you can see, my stop was still protected as it's in that area. So then what we actually see happen from this is a massive move just after. And you got to remember, this is the Friday afternoon now. So Friday afternoon on month end. So there's not many people in the market, and the people that are in the market are likely to go with a risk-off approach, putting their money into safe haven assets, the dollar being one of them. exactly what happened. So that's when we see this price action just absolutely collapse. And eventually, I believe just after 3 o'clock, it did get, yeah. So just before 4 o'clock, actually, you can see my target was hit on the trade. And it's just, yeah, it's just knowing when flows, especially dollar flows and like market sentiment will work alongside your buyers for the day, and taking advantage of these things. I'll go in the hourly. You can see it's a beautiful trade in the hourly. You have a nice SFP in the market, which then actually breaks market structure here. So coming into the Monday, could have looked for longer term trades actually coming off this order block here, or this nice level in the market there. But yeah, that's the trade for you guys.